Good afternoon again. Ladies and gentlemen, can everyone hear me up there? Hello. Hello once again. I hope you've all enjoyed your main course. If you've still got food in front of you, please keep eating. But we're going to get cracking with our main part of today's event, our panel discussion. So we want to give it as much time as we can to give them a chance to offer their thoughts on what the hell is going to happen in 2025. If you'd like to participate in the discussion this afternoon, then get out your phone and go to Slido. You can either just point your phone at the QR code there, or you can go to the website itself, slido.com. It'll ask you for a code. 25FEB is the code that you need. That will take us to our discussion here this afternoon. We've got a bunch of great panellists for you this afternoon, starting with Chris Illman. Some of you will know Chris very well. He's been an absolute star of Australian media for decades now, an award-winning journalist, former political editor at Nine News and also the ABC. He's co-authored political thrillers inspired the Netflix miniseries Secret City, which I enjoyed immensely. With independent filmmaker Screencraft, he's written and presented documentaries on the Ukraine war and the real costs of net zero, which I'm guessing some of you in the room would have seen at a special screening just last night that Rob hosted and tried to steal my gig. He's also a columnist with The Australian and a political contributor on Sky News. So Chris, thank you for being with us this afternoon and welcome. Tim McCormack has been a mining analyst for 15 years, spending the past decade at Canaccord Genuity, leading the precious metals research team. Prior to finance, he worked FIFO as a geologist at a number of mine sites across WA. Would you please give a warm welcome to Tim McCormack. Emma Scotney has a background in corporate and commercial law and is an experienced non-executive director who's provided advice across multiple industries on an extensive range of critical matters, including commercial contracts, corporate governance, private and public mergers and acquisitions, legal due diligence, international supply agreements, royalty agreements, capital raisings, ASX listing rules and ASIC policy. She's currently non-executive director at De Grey Mining Limited, Minerals 260, and is the Commissioner of the Insurance Commission of Western Australia and a board member of Intergrain. She's also a co-editor of a publication called The Negotiation of Key Merger and Acquisition Clauses, Getting the Deal Done, which was published by the Federation Press. That's a lot, Emma, so you sound very busy, so thank you for sparing us a couple of hours this afternoon. And finally, Liam Twigger, Executive Director and Deputy Chair at Argonauts. Doesn't need too much introduction. He's a regular here at the Mining Club. He'll be moderating today's discussion around the market outlook for 2025. It'll take a brave person to see what's going to go on in 2025, but luckily for us, Liam Twigger is a very brave man. So Liam, over to you.
Thanks, Tim, and good afternoon, everyone. It's great to be here, and a shout out to Miners Promise. Argonaut, we've been partners with Miners Promise for 3 years, and you couldn't get a better organisation to be partnering with and being connected with. They're a great group of people, and they're there when you need them most. So if there's any group you want to get behind, I couldn't think of anyone more appropriate than Miners Promise. So good for them, and get behind them. Now, it's great to be here for the 2025 Market Outlook. We've got a fantastic panel here, and I guess looking out in terms of setting the scene for 2025, I guess Donald Trump, features, large and centre. The die's been cast. He's back in the White House for the second time, probably looking more like a mafia don and the Godfather than a president. And I think the only thing missing from his press conferences is a baseball bat. Now, gold, the markets aren't quite sure how to react. They've been very volatile and choppy, but the clear winner has been gold, which is up 40% year to date. And I think the outlook for gold, which reflects the sum of all fears, couldn't be better. But so staying on the political front, and maybe to kick this session off, I'm going to go to Chris and say, Chris, what advice would you give our Prime Minister in how to deal with Donald Trump?
Well, I would start by saying that I think that the government should live in the real world and not in some green-wishing fantasy land, because the Australian government's policy on energy, as far as I understand it, goes something like this. We actually do believe in nuclear energy for submarines over the distant horizon that will cost billions of dollars, but don't believe that we should use it to generate electricity. We do believe that we should export uranium, but we shouldn't use it ourselves. We do believe that we should export 6 times more coal than we burn, but shouldn't burn it here for electricity, even though a tonne of carbon produced anywhere is apparently a problem everywhere for the environment. We're building an electricity grid on the East Coast which is based around the whims of wind and solar power, which cannot function without gas, and yet we've made it impossible to tap gas from under our feet in Victoria and New South Wales. So we're now actually building liquefied natural gas import terminals on the east coast of Australia, even though there's gas in Victoria and in New South Wales. And at the same time, we're pushing for a target of net zero when China's not doing it, India's not doing it, Russia's not doing it, and now the United States is not doing it. And I've interviewed the US Energy Secretary Chris Wright, and he said that he thinks net zero is a sinister target. So what on earth is Australia doing? In terms of our energy policy, a group of 6-year-olds with crayons would struggle to come up with something more incoherent. So I would just urge the government to look at the world as it is, not as they wish it would be. Otherwise, we are on a pathway to poverty.
God, there you go. Well, I think we found out this morning in the press that how we could save the government $368 billion and not have to worry with AUKUS. We can use Virgin pilots to spot the enemy coming over the horizon, and they'll do it for nothing. So anyway, moving on. Now, I'm thinking Trump, stage 2, and the outlook for gold. Moving to Tim, what do you think? What is the outlook for gold and gold equities over the next year or so?
It's certainly a brighter spot than Chris's summary of the Australian energy market, that's for sure, and really the bright spot of the equity markets in general. I think if we silo Donald Trump and his potential impact on the gold price and the globe, the gold thematic has been creeping around with good tailwinds for 12 or 18 months, and they're factors like rate cut cycles. There's really good data on, coming out of these cycles, what the gold price does. If you track back data over, the last 75 years, there's been 8 cycles, and the average is about 40% up over a rate cut cycle. Now, it's debatable whether we're in one of those right now, but certainly, the couple of rate cuts we had was positive for momentum and sentiment last year. Other factors that I kind of think about that are interesting and positive for gold are certainly around the demand stack, and we've seen a real pivot from central banks and ETFs now as well, coming in on top of the more static kind of demand things that are in that pile, which are jewellery and the more consistent sort of demand things. So that's definitely helpful. There's a run on the kind of vaults, which is getting a lot of media at the moment. There's people pulling in their gold bars from all over the world, and you can actually get yield on gold in some of these banks as well at the moment if you're happy to let it sit there. Then if you go and layer Donald Trump over the top of what is a pretty positive backdrop, it adds kerosene to an extent, I feel like, to what is already a pretty good bonfire that's going on for the sector. And it's not anything fundamental that Trump's sort of saying or proposing, I think. He just has this way with Elon Musk of sort of information saturation that just causes chaos and confusion. And at its core, gold is a safe haven that you go to in time of uncertainty. And I think that's unfolding right in front of our eyes and really compounding what is a very strong structural tailwind. In terms of the equities and the gold equities, yes, a lot of them are trading at kind of all-time highs and people think they're expensive. The reality is they're not. The Australian gold producers are trading on average, some are more expensive than others, but around about a 20% discount on average to my valuations, the street valuations and everyone's. And if you go and look at some of the majors, Barrick, Newmont, these kind of names, they're trading right down at sort of 40% discounts to where the street sees fair value. So we are emphasising and imploring people that the sector is a very good place to position money at the moment, and one that should, all things remaining constant with price, be a happy place to put money. And it's a sector, again, that hasn't seen, I don't think, a real shift of generalist money into it either. There's been a lot of specialist resource positioning money in it, but that real wave of generalist money is what will be the next leg and push all these things sort of 50 to 100% higher is how I'm reading that sector.
So super bullish, really.
Yeah.
I just came back from South Africa and was at a conference there, and the central banks around the world are currently holding about 35,000 tonnes of gold in their reserves. And if you counted gold as a currency, it would be the second largest reserve holding. So it's US dollars is number one with about 7 trillion around the world. It used to be, you know, the euro and the pound and yen, but gold is number two. And the other dynamic, which I think sets the market up for a 10-year sort of bull run, is that the buyers of the last resort historically were the Chinese retail dealers or the Indians. But at the moment, it's central banks. When the price comes off, it's the central banks come in. And I think that's a very good sign, very strong sign for gold.
The other thing I think with equities that is important is that different to the 2020 kind of last bull run, a lot of lessons has been learned by management teams from then, and that was a time where it was kind of shoot from the hip M&A and blow your brains out with 100% mergers. There's been a real rise of kind of these mergers of equals and sensible M&A, and a lot more capital discipline I think has crept into these businesses, and all the M&A I've seen recently has been logical and makes sense.
Yeah. Before I get to Emma, and it's topical M&A, but I'm not going to let you go without a comment on lithium. There's a lot of people out here with a vested interest in lithium. What do you think?
I'm probably going a little bit out of my lane on lithium, but there's two ways to think about it the way I see it, and you know, it's not my sweet spot, but by osmosis the firm does put a lot of time and brain power into it. The supply side I think is challenged for the next couple of years, and that's essentially driven by the latent capacity that's built in already. It's different to lithium 2.0, I think they were calling it 3 or 4 years ago, where there was no latent capacity within the system. Now we've got a lot of mines that have been stuck on care and maintenance and can react very quick to any spike in price. That, for me, keeps a bit of a cap on the price until we see a real uptick in the demand side. The demand side, I think it's important not to get caught up in mainstream media. You know, we see headlines like Tesla sales down 30% or something this quarter. You know, you zoom right out and you look at the output coming out of China and the overall demand for electric vehicles, which is kind of driving that thematic. That's very much still in train, and that demand is going to increase year on year, and we get into a supply-demand imbalance in about 2 years' time, and that's where we should see prices start to trend north and find a steady state.
Until then, just sort of hang in there, I guess. Now, talking M&A, we're blessed to have Emma on the panel here. As it happens, two of the big deals at the moment, Northern Star have got a $4.9 billion bid for De Grey, and Emma's on the board of De Grey. And you're also on the board with Tim Goyder on Minerals 260, have a $160 million deal acquiring the Bullabulling gold assets. So it's a unique thing to have two deals. I'm not sure which one will get deal of the year, but you know, you're in the front and centre for there. What's your view on the appetite for M&A? Risk and volatility is generally the nemesis for deals, but with the backdrop of that, we're still seeing stuff happening in the gold sector. So what's your view on the appetite for M&A?
Yeah, I think we've all been seeing a lot of M&A, and the heightened gold price and environment has been really conducive to more sensible strategic M&A and different slicing and dicing. So you're seeing strategic positions, you know, where another company will take a relevant interest to 19% and just get a placehold there, mergers of equals, and then, yes, in De Grey's case, an offer, a takeover offer. So I think agreeing with Tim, it makes, where there's been a lot of sense and a lot of research into doing that, it makes sense. I think in De Grey's instance, we were prepared. We knew the value of our asset. We understand that. We understand the economics and the scarcity of that. Undeveloped new gold projects are very few and far between in the world that are of the scale of De Grey. And so we'd been working for a long time to really make sure that the value that we were attributing to it was actually stacking up. And of course, the gold price helped that. After we did our completion of really fulsome studies, we were then also able to then add an increasing gold price to that. We have good M&A experience around board table, but then our advisors really came into play as well, our corporate advisors, our takeover defence team and our external and internal legal teams. So it wasn't a surprise. We felt well prepared and were able to elicit a compelling premium that we felt we could recommend to our shareholders as a board. And obviously that's all still subject to disclosure documentation and shareholder approval. But yes, there's been an incredible amount of M&A activity in gold. As there was with lithium, we saw a sort of similar thing happening with lithium, and again, strategic positions taken in certain companies as well as full-blown M&A. So
It's been brilliantly played by De Grey. I guess the management team was set to build the project, and I think that was the preference. And then along comes a bid with a nice premium, and there's 4.9 billion reasons why to not do it and to accept the bid. But well played, and good luck with closing out the deal.
thanks, Liam.
Now back to Chris. So I've watched your video of the documentary. I've actually watched it twice to let it sink in, and I watched that just before the start of the new year. And then we come into the new year, Trump comes in, and literally in the last 4 weeks, you can sense the ground absolutely shifting on this push for net zero by 2050. In fact, I'm wondering now whether it's just a bump in the road or whether the cause for net zero for 2050, has been fatally wounded.
Well, no one was ever going to hit these targets, right? So we talk about net zero, that at some stage we will match the carbon that's produced in the atmosphere to the sinks that we are going to have. That's the project, right? But everyone's always talking about electricity. Well, electricity is 20% of the problem. Like, the really hard part is how do we deal with the fundamental building blocks of industrial society? That's producing cement, steel, plastic, and ammonia. And ammonia, of course, is used to feed half the world's population. So, the process that we've got uses natural gas to take nitrogen out of the atmosphere. The food that you're eating today literally has fossil fuel embedded in its production. There is nothing you can see in our environment which doesn't do that. This took us 120 years. Now, we are apparently going to, and over the course of the last 25 years when we've been on this track to try and cut fossil fuel from our environment, we've gone from 86% fossil fuel in our primary energy system, this is worldwide, to 81%. So apparently we're going to get that somewhere near zero in the next 25 years. This is literally a fantasy. This will not happen. And the governments of the world have signed themselves up to impossible targets. I have been to COP26. I've seen this giant trade fair where everyone is there selling different kinds of goods to each other. This is the greatest transfer of wealth from taxpayers to individual companies in the history of humanity. We've got two choices, and I'm not denying climate change. Right? I'm saying that climate change is a problem. It is not an existential threat. There is nothing in the IPCC's report which says the world is about to end, although that's what all of our youth actually believe. The US did a study under the Biden administration where it looked at existential threats, and there were 5 of them. One was artificial intelligence, the other one is asteroid strike. Climate change is in there. It was the only one that they didn't put down as an existential threat. So yes, we have to deal with it. Yes, we have to do something. We have two choices. We can either spend trillions of dollars, which is what we're doing now, to get all the countries on Earth to act in unison and for nobody to cheat, something that has never happened at any time in human history, in order to try and change the temperature of the planet, or we can use the wealth that we've got to try and adapt. Now, which makes more sense? And particularly, as I said, now that we've got China burns now 56% of the world's coal, and the demand for coal has gone up every single year. 2 years ago, they were permitting 2 coal-fired power stations a week. 60% of the electricity comes from burning coal. The solar panels that we get are made from burning coal in China. So the point that I would make about where we stand is that we are 1% of the world's emissions. If you put China on the graph, 33%, the United States, India, we're talking about 60% of the world's carbon emissions are now being produced by countries that have no intention of doing net zero. So what on earth is Australia doing? The only thing that we are doing is making electricity ridiculously expensive. And this is on the East Coast. And the one thing I would say to this room today is you have power here in Western Australia. The mining industry is large here in Western Australia. I would raise your voice against the direction that we're on now in order to try and stop doing what the East Coast is doing. because we are on a pathway to poverty. And we are deindustrialising. And look around the world, Germany, the UK, California, South Australia, everywhere where they have tried to force large-scale wind and solar onto the grid, the price of electricity has gone up, the reliability of the grid has gone down. So yeah, I mean, I've come back out of retirement because this is a passion for me now, because I genuinely believe that the red lights are flashing everywhere, but an environmental movement which is cashed up with money from wind and solar industry is driving the debate, and it's time that other people raised their voices and said, sure, we'll use wind, we'll use solar, but in amounts that make sense. And for the time being, it makes sense for us to use the resources under our feet to stay rich.
So just touch on what do you see the role of gas then?
Well, the thing is that if you look at and take the stuff I did in the documentary, is we didn't talk to politicians, we went to talk to people who actually produce energy and have to run energy systems, and the story was the same around the world. And it's the same here. So if you look at the Australian Energy Market Operator's plan, and it's not a plan, by the way, to run an electricity grid, it's a plan to hit a target of 82% renewables by a certain period in time. That's what the plan is for. So when you pervert the court, so the electricity system should produce cheap, affordable power. It's not. Now the design of it is to cut carbon emissions. But in order to do that using wind and solar can't form a grid because they're intermittent. Sun goes down, wind drops. So you've got to have something that balances it. Whatever you put in to balance it is going to be expensive, particularly if it's battery storage, because battery storage doesn't last long enough to cover big wind droughts. So the only thing that can match it, its peaks and its trough, is gas. But the people who've been building this system around wind and solar are the same people who've demonised gas as a fossil fuel. So the Victorian government banned the exploration of gas while building a system that needed gas. The New South Wales government essentially did the same thing. So now Squadron Energy, thank you Twiggy Forrest, who's lectured us forever about green hydrogen, is now building a liquefied natural gas import hub where we'll pay the international price for gas. So, like I say, none of this stuff actually makes any sense.
Well, it's great to have that voice. I think the documentary was the first that I'd really seen or listened to in terms of how much it's going to cost, and it's just like the elephant in the room that neither political party really are addressing. And it's great to have you out there blowing the trumpet, and I guess you've got a very receptive audience here, but it's incumbent on all of us to be aware and to promote this fallacy.
Yeah, look, the only other thing I'd say is that Meg O'Neill is in our documentary, and I'm hugely grateful to her because it is time for the chief executives of mining companies to stand up and be heard on this. The argument is being dominated by people who are pushing a particular line, and the economics and the energy system realism is not there. It needs people who know what they're talking about to join the argument.
Yeah, well, actually talking about chief executives, that's a nice segue. I dare say we'll circle back to this issue, but I now want to talk about probably the ASX and ESG, and a question for Emma. Do you think we've reached peak ESG? Is that the one good thing that will come from Trump, where he sort of called that out and put some steel in the spine of those on ESG committees to maybe push back on some of the recommendations?
Yeah, I think it's a case with everything. ESG and that movement had its place and was required to inject some balance into looking after the resource base and certainly being more cognizant of elements that maybe we wouldn't necessarily directly associate with profitability. Like anything, the pendulum swings too far and there's a correction. And I think we see that as recent as the ASX governance principles recently, the 5th edition, not actually coming into effect and in fact voted against by the ASX itself. So where there seemed to be, to many of us, an overreach as directors with some of the compliance with that and reporting. So ESG has its place, and I hope and look forward to the day that it's just an inherent part of what we do as good business and profitability, and it's not this discrete, complex, separate area where we focus our attention, but it's integral into our everyday practice to be a sustainable industry for decades, centuries to come.
Well, I think that they're great comments, but I think it's very important that people realise that the cost of ESG and all of this compliance is significant.
Yeah.
And the global exchanges are suffocating the creation of capital through forcing on listed companies this compliance and regulatory regime,
Yeah.
and it's affecting and impacting shareholder value.
I think that is the absolute case. We see it just with the volume of legislative change that directors have had to be across. We've had nature positive in and out. At a state level, we've had Aboriginal Heritage Act to get our heads around it, and then not. We've had a lot of Workplace Fair Work Act reform, and a lot more shooting home in terms of liability to the individual director. So, you know, that's not to be taken lightly, and it does consume a lot of the board agenda that traditionally was more focused on actually business items and the order of doing business. So that has been particularly time consuming in the last 12 months and very unsettling. I mean, we've seen that with even approvals that have been federally and state approved coming undone. And so, yeah, it's a very volatile and very uncertain area. And with that, I think directors have probably reached capacity and just want to get on with actually generating profits and returning those to shareholders.
Absolutely. I just want to make a couple of comments there because, I mean, the impact is significant. I mean, the attractions of being listed and almost now being outweighed by the benefits of going private.
Yeah.
And we have seen a massive wealth transfer over the last 20 years with companies delisting and going private. And it's probably been more on the London Stock Exchange and New York Stock Exchange, but the ASX hasn't been as bad. But as companies, you know, they give in to private equity, and this wealth transfer goes from shareholders to the kings of private equity, and they're making out, I wouldn't say like bandits, but probably like bandits. And and the ASX is probably the best of the worst, but it's a bit like saying, you know, you're the best chef in a burnt toast convention. You know, it's not a great accolade. It's
It's definitely a thematic with, you know, IPOs are down, but I think there is a transition from TSX to ASX that's been evident, I feel like, in the last couple of years, and we've seen companies like Capstone and Metals Acquisition Corp, and there's lots of noise around Orezone and Greatland Gold coming down later on this year. So as a destination exchange in terms of the pool of money, I think it is, you're right, the best of the rest.
We are the best of the rest. But John Wiley came out last week with a compliance manual, governance, an alternative governance book. The ASX is 63 pages of governance guidelines. John Wiley, the alternative one, which I thought covered everything, is 7 pages. And it just goes, I guess if the only tool you have is a hammer, every problem looks like a nail. If the only tool you have is writing a policy, every problem looks like a new regulation. And that's where you get to. And we've got to wind that back and make capital, it's got to become more efficient, because at the end, we need an efficient and attractive equity market here. It's great for opportunities, it attracts talent, and it allows us to raise money for the junior miners, which creates the wealth of this nation.
Yeah.
And it's being strangled slowly by this compliance regime. So just calling that out. Anyway, off my hobby horse and back to the rest. Thank you. Now, a question for you, Tim, from the floor. First question, and it's on the dark arts of being a mining analyst. And what do you look for when you're screening companies, and are all buys actually buys?
Yeah, right. That's a good question. The answer is probably no, yes, but not all at the same time. Fundamentally, we look at mining companies and we're bottom-up guys. So we start at the asset and build a base case. And every analyst is stylistically, I think, quite different, but that is very much sort of first base for me. I look a bit more qualitatively at how comfortable I can get around numbers. Management is really big for me, and I have these kind of data points through my career where, things have gone good and bad, and it sort of factors into every meeting that I take and management team that I meet, and you do be a lot more optimistic or glass half full with some rather than others. And, an example would be if Mark Clark came into my office and said, I'm going to do this on this timeline, I would go back to my office and just make that exactly what he said. If Managing Director X, we'll call him, came in and did it, I would think about all the times he told me that, let me down, let the market down, disappointed everyone, and probably go and not change a thing from what is a base case. So that qualitative overlay is really, really important and a difficult thing to actually put in, but certainly something we consider. Other aspects that I think are important is jurisdiction. You know, it's a tough one because, you know, I look at Jeff Quartermain, Richard Hyde, the job they're doing over in Africa has just been unbelievable in terms of execution, but they are appealing to a smaller pool of money and they just never get full valuation just because they're in Africa. And it's kind of sad in a way, but it's just fact. And, you know, they've demonstrated that, you know, you won't get to a 1 times where everyone values them at. The other things that are a bit more quantitative that are important, I feel like, is looking for these inflection points. We all like trying to pick, you know, when this company is going to hit its straps and start making free cash flow. So free cash flow, life cycles. Mine life is big, particularly with Australian companies versus the offshore guys. Comparatively, they're all short, and we often have to take views on resource extension, reserve extension, and that takes quite a lot of brain power behind the scenes. But, you know, in front of people, we just say, well, we can see 8 years, but we think it's going to go to 12 or something like that. It sounds simplistic, but we do put a lot of rigour into that kind of thing. And ultimately, you end up with a price target. And, you know, of the 20 stocks that are in production that I cover, there's probably only 4 or 5 that I'm ever conviction on at one time. The rest are sort of slower burns, deep value, that catalyst time will come.
Well, it's good to hear there's not just a complete black box. There's a lot of science there. I didn't expect anything less from Canaccord. Moving back to Chris, and we've got a federal election coming up. Is it the 8th of May, 12th of May? We've got, you know, we've got the Prime Minister spending like a drunken sailor. He's got $130 billion of commitments, you know, channeling Gough Whitlam. And we've got Peter Dutton doing his best to channel Trump, but based on the news this morning and his share trading, probably there's a bit of Gordon Gekko in there too. But, I mean, it's a cost of living crisis. What do you see as the main issues, and what advice, what do you expect to happen in terms of the election, and what's the worst thing that could happen?
Yeah, the problem with being a political journalist is everyone always expects you to predict the future, and the one thing I can tell you is that nobody can predict the future, so this is just an opinion based on the stuff that we know now. The cost of living is absolutely the only issue that matters to everybody. It appears at the top of every poll now, and energy is a big part of that. You know, and we're going to see probably the federal government dole out another $300 worth of assistance, which costing another $3.5 billion to the Australian taxpayer to subsidise an electricity system that is tanking because of the policies that they've undertaken. But, you know, I think that it's always a numbers game, right? So the one thing I think I can predict is the West Australian election will be won by the Labor Party because, you know, Liberals suffered a near extinction level event last time round. In federal parliament, you look at a starting point for Peter Dutton of 57 seats and a starting point for the Labor Party of 78 and the finish line is 76. Undoubtedly, Albanese loses skin, but how much skin does he lose? You would expect that the coalition makes up some ground, but now it's trying to straddle the teal seats and the regional Australia, and so it has to have 2 quite different messages in order to get there. So the most likely outcome at the next election is that it's a hung parliament with a teal and green crossbench to deal with. My fear is that government get a whole lot worse than it is now before it might start to repair itself. But the fundamental fact of Australian politics is that in our lifetimes, we've seen a collapse in the primary vote of the 2 major parties, so trust has evaporated across politics, and people are looking for alternatives. You can understand that given what the political class has delivered in the last few years. So that forming a government is hard, and once they're in government, I mean, the purpose, unfortunately, too often the purpose of government is getting into government and then trying to stay in government. And we need people at the moment to be thinking long term, and they're all thinking very short term. And the level of indebtedness of the Australian federal government and now our state governments is getting to a point where it's becoming really quite concerning, and the entire Western world is now massively indebted. So it's no surprise that everyone's looking to gold at the moment because the world is nervous. And the other thing too is geostrategically, we are seeing the world order that we all grew up in, right? So we grew up under a security blanket that was thrown down by the United States in an environment that was created after the Second World War. It's the only one that we've ever known. all these institutions, the World Bank, the United Nations, the International Monetary Fund, were laid down so that the world didn't go to war again, a world war, and the security blanket was provided by the United States. That's being ripped up. So the future will be very different from the present, and it's likely to be a much more unstable world.
I think we'd all agree with that. But there's been a pile of questions coming through, so you've all stimulated a lot of questions, and we'll do our best to answer some, and the others we can answer after time. I'm just getting the wind up, I think. But just one for you, Chris. What would it take for Australia to consider nuclear power as a viable energy source, and what are the biggest obstacles in its way?
It's illegal. And that was a deal that John Howard did with the Democrats, and that means that in order to get to the point where we can have the conversation, it's got to get through the Australian Parliament, and the Senate's likely to be quite left-wing for some time. So in the end, two major parties are going to have to agree on it. If we continue on the path that we're on, the only way that you're going to get anywhere near net zero is to do nuclear energy at some stage. The most likely case is that it makes sense in South Australia, and Peter Malinauskas is a sensible bloke. So I think at some stage, if the South Australians have any sense, and I think this would be an option for Western Australia if you explored for uranium and found it, it is to become part of the international uranium fuel cycle. There's a massive business opportunity for Australia. One of the things with the United States is that it still actually gets its processed fuel, some of its processed fuel from Russia. That's a strategic threat. Imagine if you were in South Australia and you were actually processing that fuel, making that fuel, supplying it to the US marketplace, and then you rent it back to you to bury or reprocess. That would be an amazing business to be in. Nuclear energy is the most energy-dense power that we have. The rest of the world is doing it. China's going to build 150 nuclear reactors. The United States is building 198. That was bipartisan policy. Microsoft has just reopened 3 Mile Island so that it can supply energy for its data centres, and data centres are going to chew up more energy than most cities in the world. So if we want to be in that race, we need to be in the energy race. So we can either be in it or we can be out of it. I think eventually we probably get there, but not before we've made every dumb decision we possibly can along the way.
Thanks, Chris. Now I guess it's time for some closing remarks. I'll make some and then I'll work my way along, and maybe Chris, you could wrap up at the end. But I guess reflecting on how this year has opened up and the things that we're dealing with, I don't think there's ever been a more significant time to be alive, to be human on this planet than where we are at the moment. We've got a trade war, probably on a scale the largest of all time, and it may well be a precursor of something more sinister. We've got 3 strong political leaders with Putin, Trump, and Xi Jinping. All of them have shown they're happy to stand up for a fight. And here we are, Australia, an island nation, never really been worried about our sovereignty. And you'd have to go back to 1942 when the Japs were having a crack at us, where we were concerned. And since then, we've just been very relaxed living our life. And now we've got we've got to unite as a nation, come together, look at being more independent, standing on our own 2 feet, and make sure that if anyone wants to have a crack at us, they're going to pay a price that they won't be willing to pay. And I think that's what we're looking at. And in terms of how we fund all of this, I was thinking we can adapt our own MAGA. We can make Aussie Gold awesome. And I think if we all do that, it will make a small dent. But maybe over to you, Chris, and then Emma, and then, sorry, Tim. Chris.
My closing remark would be that I implore everyone in here to go and watch Chris's documentary, because I sit up here as a financial market commentator, and I was embarrassed watching about how head in the sand I'd been in the microclimate of WA about where we're at with this energy crisis and what it could mean for the Australian economy. And I think if you take something away from today, is go and watch that doco, because it'll hit you like a lightning bolt, like it did for me last night.
Thanks, mate.
Absolutely. Emma?
I think, it is crazily uncertain at the moment. As directors around a board table, it's important to control what you can, not to be paralysed and not being able to make decisions. So obviously be informed, even though that information seems to be changing on a daily basis, but to really pay attention to what we can control, what we do well, and make good decisions.
Yeah, look, and I've got to say, I love being in Western Australia. I live in Canberra, so it's a very different environment, and that part of Australia is now so disconnected from its sources of energy, its sources of food, and its sources of wealth that it's actually voting against them. In Western Australia, you understand where those things come from. And I think it is incumbent upon people, like, don't believe what I say or watch the documentary, sure, but go out and test the facts yourself. You're engineers, you are practitioners, you know the way that the world works. You need to speak up. You need to basically be raising your voices if you actually believe that we are on a path that is leading us essentially to poverty. Then people need to speak up now. I think too many people have been cowed into silence. You know, the one that gets used against me all the time is that, you know, if you don't believe in whatever X it is, you must be a climate change denier. People want to shout you out of the debate. So the only thing I can say is, if you believe that there's an issue, then speak up and be grateful at least that you're not connected to the East Coast grid, because, you know, that is a great blessing.
Lovely. Well, it's time for the silent majority to find their voice, and that includes all of us. So, ladies and gentlemen, it's been an absolute honour and a privilege to be on this panel with such leading lights. I've really enjoyed the discussion. I hope you all have enjoyed the debate. We will get back to any of the questions that we didn't answer in due course, but please put your hands together for this amazing panel. Thank you.
Thank you. So I'd like to give a vote of thanks to Emma Scotney and Tim McCormick. Thank you both. Lovely to have you both here today. Chris Ullman, thank you for travelling from the East Coast to be here today and for last night. The real cost of net zero is absolutely worth viewing. There was 100 people that joined us last night at RAC Arena, and we were very grateful to have Chris, Andy Drummond, who's the Executive Vice President Strategy at Woodside, and Mark Schneider, Chief Nuclear Officer from UBH Group, for being panellists as well. And to our good friend and superstar moderator, Liam Twigger, this event is always really popular, as you can see from everybody in the room. So thank you once again. Proves that everybody wants to be here to see you talk to everybody else. So thank you.